I'm Doug MacKenze.
And I'm John Ward.
And we're the co-hosts of the ABCs of IBC podcast.
Come join us as we share our unique perspective on the infinite banking concept as the creator, Nelson Nash, intended.
Welcome, everybody.
Hello, Doug.
For another magnificent, fantastic episode of the ABCs of IBC.
Awe-inspiring.
Awe-inspiring. How's everybody doing? Good, I hope. I know you can't talk back to me, but I'll pretend you can. We're great.
Okay. All right. Enough of the small talk.
Yeah,
Let's
exactly.
get to it. All right. So what are we talking about today?
We are talking about IBC and whole life insurance for business owners.
Okay.
But you had something that you wanted to add as kind of a supplement and follow-up to last week's episode about using whole life insurance to replace bonds.
Right. So when we talk about, as part of our portfolio, so to speak, is, making bonds a component, it's really considered, income. It's sort of the guaranteed income portion of, right? There's going to be cash flow, but in the eyes of the IRS, well, income is taxable. So even if you were investing in things like tax-free municipal bonds or something like that, yes, they're tax-free, but they also go into the formula that we've talked about for Social Security and whether they tax it or not, which is called the provisional income. Mm-hmm. And so
Medicare,
because it falls under the definition for the IRS is income, that gets put into that formula.
Yeah.
And so it potentially becomes taxable.
Yep.
But when we're doing whole life and infinite banking, well, it's tax exempt and it doesn't fall into the definition of income for the IRS or anyone else. It's cash flow when you're streaming money out of the policy. So for retirement or for supplemental income or what have you. So I thought that was an important piece that is the drawback of investing in bonds directly, right? It's just, and it's more of, let's say, an advantage of a whole life policy.
Yeah. Yeah, it's a good point. I mean, you could be drawing six figures of income from a whole life policy and pay zero Social Security taxes and pay nothing for Medicare.
Yep.
And be on food stamps.
Yep. Because because that income is cash flow.
It's not income.
I keep trying to redefine or to differentiate between the two. Yep. Income is taxable. I mean, potentially, and in many cases it is, but cash flow is not.
Yeah, and it's a good point, John. And we, by the way, if you don't know what we're talking about, if you listen to last week's episode, you'll know. And we sat there and we said, should we try to edit that in? And we said, nah.
Yeah,
that sounds like a lot of work. Yeah.
Yeah.
John said, you want to try to do that? And I said, no, I don't.
Yeah, and I didn't want to put it on Doug because I'm not willing to do it. So, okay.
All right, so we're going to talk this week about the benefits of having one or multiple of these policies if you are a business owner.
Yep, your banking system. Yep. And all your branches. Yep.
Exactly.
Okay.
You want to start it off? Or you want me to?
Why don't you give it a go?
Give it a go. All right. So, I mean, this is really an ideal system to have in place for a business owner. I mean, it just complements the successful running of a business very well, especially when we get into businesses that have cost of goods, inventory, seasonality, things like that, unknown factors, right?
Yep.
So, when I talk about cost of goods, like a company that literally has inventory that they're holding and then buying to, selling to someone else for more than they bought it.
Yep.
seasonality. So you might have a business that does 80% of their income in a couple months. So there's a lot of businesses that do most of their business like Thanksgiving through Christmas.
Right.
Or if you are a company that does landscaping, you're going to make most of your money, May through October, and you might have a very quiet winter. Maybe you can, if you're up in the Northeast, you do some plowing, you do some other things, but you're going to make the vast majority of your business off season.
Yep.
You're somebody that does outdoor construction. Again, if you're up where we live, you're not doing a whole lot of that in the middle of the winter.
Yep. I would say there's a lot more business owners running through seasonality. I mean, there's going to be the ups and downs. And the other ups and downs is, are people paying on time, right? I mean, you might give them net 30 or 60 or 90, whatever, but are they paying within that time frame? People take liberty and they don't pay on time. And so even though you have the accounts receivable that you're expecting, you haven't received them. And you what are you going to do? Well, most business owners have a line of credit, or a lot do, right? And who do you get those from?
The bank.
Yeah, go to a bank.
Well, and there's a lot of businesses, if they're very small and they're just starting out, they might not even be able to get a line of credit.
Yep.
They might not have thought of that. There's a lot of business owners that think that the business is going to go differently than it does. And there are a lot of businesses that fail when they start out.
Yeah.
And it's not because they can't make money or it's not a good idea. It's often because they can't control the cash flow.
And they call it undercapitalized, right?
Right. And just like John, you gave a great example of one of your clients, I think it was last week or the week before's episode, where he had money coming in. It just wasn't coming in when he needed it to come in. And that's generally the largest problem that business owners face. It's about timing of cash flow. And he was able to utilize his policy to bridge the gap.
Yeah, that's a great way to put it. Yeah, well, he had two things happen, right? One was some of the projects that he had done in other years and expected he would be doing them again, they got canceled. So he got hit with that. Then he was getting hit with some people being slow. And so even though he knows, that other things are going to come along because now he has the availability, potentially. And then, people are going to pay. They're just, telling him it's going to take another week, but he's got something he needs to pay for.
Yeah, he has obligations.
He has obligations.
And if you have a key supplier, they're the sole supplier of what you sell. You can't not pay them.
Yep.
Or you don't have a business anymore.
Yep.
It just, you're just done. And so even if your customers are paying you late or you're having trouble, with something finishing on time, your supplier probably doesn't care about that and wants to be paid.
Right.
And to have the ability to bridge those gaps is extraordinarily important.
Yeah, and not be beholden to a lender, right?
Well, why? Yeah.
That tells you, hey, we want you to pay X amount every month towards this outstanding debt or, line of credit.
So we talk with a lot of people that own businesses that have, line of credit at a bank, and they might be a relatively small business, and they went and they got this, line of credit, and they're paying like 15, 14, huge interest rates when they borrow, like crazy.
Yep.
And in the grand scheme of things, it's not that much compared to the benefit they get of getting cash when they need it. Like, that's vastly more important.
Yep.
But when you look at the interest rate that the insurance company is going to charge you, which I want to say right now, it's like ranging between like probably 5 and 6.5%, something like that. Does that sound about right?
Most are around 5, but there's some that go up as far as 5.7 or 5.5 right now. So,
and I'm sure there's companies out there that we don't work with that are different, but you get the gist. That's a huge spread.
Yep.
So if you're a business owner and you're used to just paying that level of interest when you've got to take money out, and instead you can pay 5%, you're saving 10% that you can then invest back in the business, make different capital choices. Like there's
Yep.
there's a lot that you can do with that. And when you get into, you talked last week, your client had some older equipment and things that he
Yeah.
might have to replace. If you are like somebody that has a capital intensive business
Yep.
and you need to be making, slightly sub 6-figure or 6-figure capital investments, the difference between paying 5 and 15% interest on that is massive.
Right.
When you look at the long term,
Yep.
yeah,
Costs of all that. Yep.
it is.
Yep.
Yeah.
No, I agree. I think, business owners that are listening to this understand. They understand cash flow. What they question is, well, if I'm always borrowing or I'm utilizing lines of credit or what have you, how do I fund a policy? How do I bridge myself to becoming my own banker, right? And some of it is you've already got expenses that you're going to have. You have payroll. You have taxes. If you have the cash flow, you're going to just pay those things. You're just going to put it into an account, cut payroll checks, put it into an account, pay your taxes quarterly or annually or whenever it is. But this money's already flowing through your hands. So those expenses you could start putting through the policy first, right?
Mm-hmm.
And you don't have to do it all at once. I mean, obviously, the more you can do all at once because you've been approved with your health rating, you're eligible for getting this type of policy. Yeah, you want to make it as much as possible, but you can slowly but surely bridge this gap, right? Because you don't have access to every dollar the first year, but as the years go on, you end up having access to leverage every dollar that you've put in. And you want to bring this mindset that I am going to flip the switch and I'm not going to need this outside lender when surprises happen or things don't go, as you said, Doug, go the way you expect them to go.
Yep.
And back to, yes, cash flow is a lot of times the demise. It is the access to capital because in different times, lenders don't lend. They don't want your business. They don't want. They got to pull things back. And so that even though you have a viable business, they can say no.
Even if you have an existing line of credit, they can pull that. I mean, that happened extensively, like back in 2008, 2009. Banks didn't want to lend.
Yeah.
And even, I mean, this is a little bit more of a doomsday scenario. It doesn't happen as often, but it can happen and does happen. They can call your line of credit. You can have a whole bunch of money outstanding that you can't pay back at the moment, but you're paying interest, and the bank can say, yeah, I'd like my money back in the next 30 to 60 days, please.
Yeah, exactly. I've heard it from clients that's happened to them.
Yeah.
And, they're scrambling and they survived, but the
you
idea
might have to
that,
do some inopportune things to get that money, that things that you weren't planning on doing or didn't want to be doing that are detrimental to your business or your personal finance,
Yeah, exactly. But back to this idea, if it wasn't even a line of credit that you wouldn't and typically would be able to go finance things, and they literally say no to things they used to say yes to.
Yeah.
And now, like, what? You're basically killing my business. I can't do this without you because I have no other alternative. Well, what we're saying is don't be beholden to that because that is a potential situation at all times. It could happen. And it's not fear-mongering. It's really the reality that you probably have lived if you've been in business long enough. Right? You've struggled in different times because of the state of the economy and the state of the banking system. You couldn't get access to cash. I saw people who were very, very successful in when the late 80s and early 90s. I mean, these people were banging out renovations and building new homes, and everything was grand.
People
and
got crushed back then.
Yeah, I had a landscaping business, and I was landscaping their property, and then I was literally stopping by their office saying, could you just give me some? Because I needed cash flow too. I mean, we're all in the same boat. We're all business owners. We're all in need of cash flow.
Yep.
Right? So I've seen it, and it's a sad day. And I'm not trying to. I've been trying to, since I got in to this business and became a practitioner for the Nelson Nash Institute, I've spent some money trying to get the word out. It's hard to market this in general, and in the marketing world is great, but I'm trying to get the word out that I'm not about fear. This is stuff that's happened. I've watched it happen. I've seen the people.
People don't think it will happen to them until it happens. And
we've been on such a run where things seemed really, really good for so many, barring COVID and shutdowns of all kinds of things that did hurt many businesses, right?
Mm-hmm. And again, I mean, that's a perfect point. Banks were not doing a lot of lending in those early months of COVID. And if you were a business that was forced to not open because of some local regulations, and you can't get money to help you out with that, or you couldn't get a PPP loan or anything like that, if you had a policy in place, you might have survived the storm.
Yeah.
And I mean, this is something that needs to be done in advance of the problem.
Exactly. That's the point.
It does not, it's not like, oh crap, I can't get a loan from a bank. I'd like to set up my policy to have it be fully funded right now. No, it doesn't work like that. But this is something that needs to be done with the understanding that down the road, in a few years, this is something that you're going to be able to utilize, but you got to do it before you are, caught with your pants down.
So great that you said that, because that's the crux of the matter for me, is that I want people to be prepared, right? And it's not just for the emergency or the, hey, I didn't know this was coming, I thought it could, and thank goodness I have this, right? I have it in place. It's also an opportunity, right? We've talked about it. That's when people really thrive. Their businesses thrive, because sadly, to create an equilibrium again, right? There's going to be losses for some and gains for others. And those that were prepared, right, having their own capital system to access, they're going to pick up stuff for pennies, as they say, on the dollar, right? And that sort of just is like the cycle of life, right? It's the cycle of business.
And it's hard to quantify the rate of return when you're able to do things like that. I mean, how do you quantify the rate of return of being able to stay in business versus not, or of being able to snatch up that piece of property that no one else can afford at the moment? Or, you know what I mean? It's difficult to quantify that, but you're exactly right. I mean, this is just about setting yourself up to take advantage or to protect yourself in the unknown, uncertain future times that will happen.
Yeah. And in the end, it will right the ship for everyone, right? We'd rather it be the working class, the people that are out there, producing everything, not the mega billionaires that are just going to scoop stuff up. Let's be prepared. Let's take responsibility. We need to be responsible for what we're investing in. And that's probably definitely a show for another time. But we in the news, we know it came out recently, but I've been watching it for a long time. There's 3 companies in the world that own supposedly 88% of the S&P 500 companies, controlling interest. And that's BlackRock, State Street Bank, and Vanguard. do they have our best interest? We're investing in them through our 401ks and all our qualified plans, IRAs and 403bs, and then the business owners, we want you to be in a position to protect what you've worked so hard to build.
Well, let me put it this way. I don't know any business owners that have implemented this and utilize it that then go, this kind of sucks. I think I'm going to go, use a line of credit at a bank instead.
Right.
Nobody.
Yeah. They just want to know, how can I do this?
Because it works. It's really simple. If you're a business owner, and I'm sure you understand this just very generally when we spell this out, or if you've listened to previous episodes, you could see the value in this. Instead of relying on someone else, you rely on a system that you own, and an insurance company contractually can never tell you no to a loan.
Yeah.
And also, really importantly, that we didn't mention is that a bank, there's a certain amount you got to pay them every month.
Yep.
You do not have that problem with an insurance company. If you go, you know what, I really have no cash for 3 months and I'm just going to sit on this, I'm going to let interest accrue, but I know I make a ton of money every March once this thing reopens and I can just pay it back then. You have the flexibility to do that.
Yeah, that's great. Thanks for that, Doug.
That's
big.
It's just better. It's better in every objective way, but it just requires foresight, planning, and then it requires some diligence in setting that up.
Yeah.
But the reward is very much worth it.
Yeah.
And the last thing that we don't want to go too far into this because we are not we're not accountants and we don't give tax advice, but we'll say that we know and we've seen people that do some pretty cool tax-related things with this, where if you're a policy owner and you are making that loan to your business, a lot of business owners will write off that interest.
Yep.
And people will charge their business more interest than the insurance company's charging them, so they can generate income from that, and then again write that off on a business level. Yep. There's a lot of cool things that you can do, and if you have an accountant that is willing to take a look at this, they can quantify that for you.
Well, I do want to at least touch on the part where that's something that comes up in conversation with prospective clients.
Yep.
Which is, how can I pay myself extra? Well, in this case, you can pay extra, from the business side. So the business is taking a loan from your personal policy, right? And you could write up contract paperwork and write everything.
Yeah, people do that.
Yep. And you could say, I'm borrowing from the insurance company at 5%. I'm charging 10%.
Yep.
But what you're doing is you're speeding up the payback, right? That's really what's happening. It's speeding up the payback of the loan. But literally, that interest can be written off by the business owner on their taxes. So to me, that's important. That I'm not literally making the 5%, so to speak, right, between the 5 and the 10. But what I am doing is I'm increasing the size of that payment. So when I'm making the payment, I'm paying off the loan to the insurance company that much faster. That's all. But you literally still
you can see that on like a simple interest repayment calculator. It's, you guys, most listeners know you increase the amount you pay, it drastically decreases the payment period. But
right, exactly.
Yeah.
Okay, cool.
Yeah, I think we both agree that, business owners are some of the people that can benefit the most from an infinite banking policy, truly. It's really powerful when used correctly, and there's so many cool ways that it can be implemented.
Yeah. Well, I just, I'm always a little cautious in leaving people with this thought that it's even better as a business owner. But the idea, because we are all running the business of our life, our financial life.
Yep.
And so it's just, think like a business owner.
It's just very easy to illustrate with a business.
Yeah. And it's thinking like a business owner, because as Nelson says, every business owner should be in two businesses, right? One is the business that you're creating this cash flow from, and the other is the financing of that business, right? And so when you have an infinite banking policy, you do have a business. So even as a individual, right, you are a business owner. That's what you're creating, because you're the banker.
Yeah.
You're the banker.
Yeah.
And that's the business you're in financing your life and all the things that we've talked about in the past, but
I mean, this works well for everybody. I just mean that it is something that is very cool if you're a business owner. It works very well, but it's not like it doesn't work for other people as well.
Exactly.
Yeah.
Yeah. Cool.
Thanks, John.
Thank you.
Pleasure
Doug.
as always.
Yeah, same here.
Maybe we'll do it again next week.
Let's do that.
Okay.
All right.
All right.
See you, everybody.
Bye.
Thank you for joining us for another episode of the ABCs of IBC.
If you enjoyed listening, please hit subscribe and leave us a 5-star review wherever you listen. It really helps. See you next week.
Bye.